Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 15th of May, Bull versus Bear webinar with Steve Miley here on the call for Trade Day. Welcome, everyone. Inflation Day, CPI Day today, all focus on that. We've got just under 1 hour to that release. Please remember, no trading 2 minutes before or after the release of that data. No trading or working orders in the order book. No trading or working orders in the order book 2 minutes before or after the release of the data, which is in 60 minutes time. Okay, so please take note. Good morning, Jim. Good morning, Stefano. Good morning, Stephanie. So, we'll go for our usual run through in here today. Again, it's going to be fairly brief because all eyes on the CPI and things potentially going to look quite different post CPI. But let's just run through anyhow. I mean, here's the calendar. Well, that's what we're looking at. CPI. I mean, it's going to be obviously what we're looking at and the reaction to it. Retail sales as well at the same time. So watching out for that as well. Later on today, 12 o'clock noon and 3:20 Eastern time. Okay, we get Kashkari and Bowman both speaking. So we're watching out for those definitely. Will they give a reaction to the CPI data? Okay. So, and also, sorry, Bar at 10 o'clock Eastern as well. Sorry, I missed that. Bar at 10. Kashkari and Bowman. So all on the agenda. Just a little bit of a heads up going out into tomorrow, because this is likely to be out before the next webinar tomorrow on Thursday. Walmart. Walmart can move the major markets. It's a big deal. So keep an eye out maybe for that going in tomorrow. Just an early heads up because we won't have another webinar before then, obviously. Just want to keep drawing attention to, I think it's an underused resource at Trade Day. So below where you are right now, we have the live school, the three columns, right? We have the three columns: technical analysis, column one, middle column is the fundamental macro research that we do from Trade Day. And then here's some more macro, more like news briefings in here from the Squawk service, which is right below where you're watching on the members area. So right below, you've got the Squawk service. Please do use the Squawk service, very useful, free Squawk service we provide from Live Squawk. And Live Squawk also provide us with various commentary and news commentary, some fundamental analysis. And I just picked out, so this was in the European briefing. The US briefing pretty much comes out bang on as we start the webinar, just after. So I often don't get to use that and share that one with you guys. But the European briefings often got a lot in there that the US briefings got in it. Schmid yesterday, interest rates could remain high. But I just pull out this one in here. So Live Squawk in here on the CPI expectations, written their own article. So I'll just throw that in there anyway, so you guys can have a look at that. So there's their own article going into a little bit more depth on CPI, and also highlighting that we've got retail sales as well today. Let's run through Bloomberg. 5 things to start your day. Well, obviously they're leading with CPI day, gearing up for perhaps the most important release for markets this year. Which way after last month's surprise move back higher in inflation, you were looking for it to maybe start to track a little bit lower again in here today. Traders are very optimistic. You can see bond prices are moving higher, yields going lower, and stocks continue to grind higher. We've had a pretty good call the last week and a half in here. We've been saying up and slowly up, and that's pretty much what's been happening here. Data CPI isn't the only data. Retail sales as well, don't forget, is coming in as well. Meme stocks continue to go mad in here. GameStop's was surging 31% pre-market trading, and AMC jumped 34%. So back to that meme stock craziness. Got some articles we'll share on that with you. And copper market, futures of metal surged to a record high in New York. So again, underlying the kind of the positivity across the global economy, really. Strength in copper, highlighting the strength in the global economy. It's going to be a short webinar, guys. Stock futures hold gains, just run through pretty much what we've already discussed ahead of key data. European shares are up, actually, European exchanges hitting record levels. Copper, again, they're highlighting, hit a new record this morning. New York stock, new stock records jumped the CPI gun. So again, saying here, we are seeing some indices. Obviously, the US indices are not back to records in here, but getting close in here, the US indices. But some of the European indices hitting, excuse me, new highs in here. The stock 600 hitting the stock 600 pan-European index, hitting new records. The FTSE 100, the UK also. Upbeat earnings lift European shares to record highs. There you go. And then in here, futures flat on the US as we go in. And then again, here's the FTSE UK markets. Hit a record high on experience boost and waiting for US CPI, obviously. Hopes for soft landing at stake as investors wait US inflation. So, what we're looking for is, soft US inflation. So the US can start to cut rates to ensure that we're going to get the soft landing that the markets are very much pricing in. Soft landing being not going into recession. Looks like we're going to be okay with that. But, it would help if the Fed could start to cut rates, and they're not going to do that until we start to see inflation come better under control. And then going back to the meme stocks, love them, hate them. Meme stocks are back. GameStop, AMC going crazy again. A couple of articles that GameStop, AMC rising, heavy trading as meme stocks roar again. Quick nod to the overnights in here. Very little happening on the Asian markets. Nikkei pretty much unchanged. The 0.2 down on the Hang Seng. If we go to the European exchanges, pushing higher, but not aggressively this morning. 2 to 3 tenths up on the UK FTSE. Just under 0.5% up on the German DAX, and actually slightly lower on the French CAC in here. And if we go take a look at what we've got on I haven't opened that up in here yet. So we obviously pushed higher again yesterday. NASDAQ, you can see there was up 0.75, nudging higher on the US stock indices. And if and when this opens up, we'll see on the overnights in here, US futures are fairly quiet in here as we go into the day. Once this pops and loads, you can see Nasdaq's pretty much unchanged, as is the S&P and the Dow, so pretty much unchanged. Mid-cap 400 actually slightly higher in here, but most of the markets marking time unsurprising as we go into the data. I'm still got an underlying bullish bias going into this. I've been a bull for a while. I'm staying a bull. My underlying bias, the short to intermediate term, is still bullish. The trend is up. The fundamentals look positive. If the numbers really, I think the market's priced that way as well. The risk is that we get a bigger number, a higher number in CPI, and then we could see a significant sell-off. That's the real risk, I think. But I think if the market comes in, if it comes in about in line, I think we go up. I think if it's better than expected, I think we definitely go up. And then if we see it actually just slightly worse, I think the market might dip, and then it's a buy opportunity. But if it's notably worse, then we could get into panic stations, and stocks could really sell off. But you can see what the Treasury market's thinking. Yesterday we went actually initially to higher yields, reversed back down. So we pretty much took in the whole of a 1.5 week range in here. We actually went out to the top of the 1.5 week range, almost back to the bottom, and then overnight this morning we're down, breaking out at the bottom of that range. So we've had a 7 or 8 day range in here on yields. And we rejected higher yields and gone to lower yields. So that's higher prices. And remember, lower yields in here, positive for stocks. And you can see it here on the US 10-year note. We're actually flirting. We're actually above now this trend line on the 10-year note. And they've got the 30-year notes still some way away. And the 5-year note, again, flirting with that trend line. So we're on really important levels. So if we can go to higher prices, lower yields in here. So do take a look at these levels. The levels we have in here at the end. Now, if we start taking out some of these levels on the top side on 10 years and 5 years in here, that's going to really help the calls for stocks to go significantly higher. And obviously, stocks pushing higher. We're not too far back off those record highs in here again. So undone now. Pretty much most of the April sell-off now. And we could be, this week, we could be in striking distance of hitting record highs again and make these record intraday highs. I think the Nasdaq might have even closed at a record high yesterday. So markets are actually looking still very buoyant. And as I say, I think it's clearly all about the CPI, but I think inline might see dip, and then I think it's a buy opportunity. If it's significant, and if it's like 1/10 worse, then it's probably it goes lower, and then I still think it switches and you buy. If it is more than 1/10, then that's the real risk, that we could see some real fear coming through that, okay, inflation's stubborn. The Fed, it might be off the table for rate cuts this year if they think that inflation is going to be stubborn, if the market interprets that. So I think 2/10 worse than expected is a real problem. 1/10 probably not too much of a problem. Is then probably buy the dip on stocks. If it's in line, it might be a slight dip and buy the dip again. If it's better than expected, it could be off to the races because the market is clearly bullish and wants to go up. Okay, that's my 2 pennies worth. Short webinar. We're ahead of a massive peak of data that we've been waiting on. So I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow to pick the bones out of the CPI report. Have a great one. Helmets and goggles at the ready, guys. Don't forget, no trading 2 minutes before or after the data. No trading, no orders in the order books. Have a good one.